Good morning. This is Mayor Valensky with Driving Markets. I hope you're well. Okay, so markets are down overnight from Asia to the US, Europe and UK. All the futures are down on the back of, if you recall, what Jerome Powell, the head of the Federal Reserve, stated last week on Thursday to the IMF, International Monetary Fund, that interest rates will probably need to go up at the next meeting in May by 50 basis points. The probability is that interest rates will rise every meeting by 50 basis points. And make a note, may be that in between meetings, the Fed will raise rates also by 25 basis points or 50 basis points, depending on the inflation environment at the time. As far as I'm concerned, as far as I can see the markets going forward, I think that inflation is going to be the biggest threat this year and next year. I can't see it being tamed or brought under control at the moment, simply because the central banks from the US, Europe, UK and Asia are behind the curve. In other words, they're acting far too slow in bringing inflation under control. They should have already started back in January, February, but they didn't. And the action they're taking is simply far too slow and far too little. So that's just going to allow inflation to run riot. As I've stated many, many times, you've got reported inflation at 7% in the UK. You've got 8.5% in the US. However, overall, the real inflation is probably running at anywhere between 18 and 20%. On the back of those comments, the markets are very, very nervous, and therefore investors have decided to pull short-term their money out of the markets and move away from riskier assets, whether they're the Nasdaq or growth stocks or any type of fast-moving stock, and move it into either cash or more safe areas. The US 10-year Treasury is running at 2.99%. It's a tiny bit off the 3%. That 3% is a significant number because that'll push rates to the highest since 2018. And as a result of that, that will cause more concern amongst investors and get them to look to invest in cash and other types of safe havens. So you have to keep an eye on the 10-year Treasury, and remember the 10-year Treasury will be following inflation. So as the fear factor amongst general investor moves on, that 10-year Treasury is going to move higher and therefore strike fear amongst investors even more than we have presently. Also, let's look at what's happening this week. Wow, you've got all the major high-tech Nasdaq companies reporting. You've got the Facebook, Amazon, Apple, Microsoft and Google. I want to focus specifically on Facebook. If you remember the last quarter, maybe you've only just joined Driving Markets, but the last quarter, Facebook came out with some pretty horrendous numbers. And not only were the numbers bad, but their forecast was also poor. And that drove the shares down from $380 a share all the way down to $200 or less a share. At the moment, they're just above $200. However, if Wednesday's numbers that Facebook reports are going to be poor, then you'll see the shares could float all the way down to 150. And that's excluding the fear factor within the markets regarding interest rates. So that alone could add further impetus to a Nasdaq fall. Now, I've been calling the Nasdaq from the beginning of the year down to about 7,000 for this year, simply because I think that interest rates and inflation will erode the value or erode the certainty and confidence with which investors invest in the Nasdaq. And the Nasdaq is highly sensitive to interest rate movements simply because it's a highly speculative index. And therefore, anything speculative under a high interest environment is going to be put to the side, and investors are going to look to move their money elsewhere. So the Nasdaq could be very, very volatile, and you've got to keep an eye on those numbers coming out from Facebook, Apple, Amazon, Microsoft and Google. It could be that any of these numbers are poor or will push the markets down even further and damage sentiment. Also, oil is down on the back of potential global recession. So the big word around the market now is recession. Investors, analysts, banks are convinced that we're going to go into recession this year. They believe that the next 12 months we're going to be start of a recession, and that's going to have a big impact on corporate earnings. Foreign exchange markets, you've got dollar strength. So the dollar is very, very strong against a basket of currencies purely on the back of that interest rate comments made by Jerome Powell. So you're going to have dollar strength. As I said already 2 weeks ago, the dollar looks like a good buy, and that's been borne out in the numbers against pound, against euro, against Aussie dollar, and against the Japanese yen. So the dollar is going to be a sought after currency going forward over the next few months based on interest rate fears. Keep an eye on that. Cryptos are down again, purely they're speculative. Therefore, investors are pulling out of highly speculative assets like Bitcoin, like cryptos, and they're probably moving money elsewhere. So that's also something that's been impacted by Jerome Powell's comments. You've got the shares also in terms of equities. You got to follow Twitter simply because I'm a big fan of Elon Musk, and I think that Elon Musk will take over Twitter. If they don't allow him to take over Twitter, then Twitter's going to go nowhere. It's really a very poor social platform and not got no direction. So someone like Elon Musk can put them back on track. Remember, Tesla reported last week huge numbers, huge flow. So in terms of cash to buy out Twitter, whether it's coming from bank finance, which it is, and some from his own personal relinquishing of some equity, then that hopefully will happen and he will take over Twitter. What else have we got to discuss? Also, look at mortgage rates. Mortgage rates across the US and the UK, fixed rates are going up to between 2.5% and 3.5% without any further interest rate rise. Once that does happen, then mortgage rates on the personal side will go a lot higher. You can catch me on LinkedIn, WhatsApp, Instagram, YouTube. Subscribe, like, etc., etc. This is Mayor Valensky with Driving Markets. Have a good day.